Again, I implore you to remember, f your puts, f your calls. Jay Powell has you by the balls. God bless my money printer.
Welcome to Market Makers, everybody. Your home for tomorrow's TA today. Often imitate it, never replicate it. Hope everybody had a fantastic weekend because welcome to Hell Week. This is our catalyst-driven market, and boy, do we have a huge catalyst on Wednesday. We have the CPI for the USA coming in, which the Fed is predicting will be cooler. We shall see. And of course, we have the Fed meeting afterwards for a rate decision, but they're anticipated to do nothing. But we also get the economic projections at this meeting as well, meaning they're going to move the dot plot around. Will the market care? We shall see. The market will certainly care about the CPI. If that number comes in cooler, expect the rally to continue. If the number comes in hot, meaning spot 3 or higher month over month, expect the market to give up the rally. It's really that binary. It's really that simple. I can sit here and pretend that all the patterns in the market matter to you right now, but this, in my opinion, is a catalyst-driven market and is being fed by the data. Right now, we're trading in a market where NVIDIA is responsible for 34% of all the gains in the S&P. We have Bitcoin sitting right up near its all-time high. The market's sitting right up near their all-time high, but we have bifurcation in the markets. We have the Dow struggling at the 50. We have the Russell below the 50. The Russell is beta. If we're going to break out, that needs to break out above the 50. Only 48% of the S&P is actually above the 50-day moving average. That's because the top 10 stocks account for almost 44% of all the gains in the S&P, and it's all big tech. So we have this really bifurcated market, and what we're going to focus on in this video is looking at the targets because we don't know what the CPI is going to be. We don't know if it will be hot. We don't know if it'll be cool, but we need to look at the support levels based on market structure, based on Fibonacci, and those same resistance levels, especially for the cryptos as well, because we're either breaking out for a new all-time high, or we're giving up a lot of these gains. Now, since I made my video last week, we had non-farm payrolls come in, and non-farm payrolls gave a blockbuster number, if you want to believe it, 272,000 new jobs added. Now, juxtapose that with the household survey, which says we lost 400,000 jobs, or the ADP private payroll survey, which said we only gained 152,000 jobs. The non-farm payrolls report is a bunch of bullshit. They use a birth death model. To keep this in perspective for you, for 2023, after all the revisions were done, we lost 700,000 jobs. Right now, we're at a record high for part-time work ever in the United States of America. And just a quick anecdote, I have a couple of friends that have wives that are stay-at-home moms, young children. Both of them, I was at a barbecue over the weekend. Both of them, and I didn't know this, had started working again part-time. And I said, oh, why'd you start working? They're not traders. They're not economists. One's a school teacher. She said, because everything's so expensive now that they need to take extra work to make ends meet. Right. And I think a lot of you have relatable stories like that with friends and family, maybe yourself as well. But that's where we're at, guys. We're at a place where inflation is about 30% higher for food purchases alone, according to the Wall Street Journal last month. 30% higher than 2020. So they focus on these numbers like spot 2%, spot 3%. Look, inflation's coming down. The cost of living, the cost of being a citizen in this country is more expensive. And you're seeing that around the world. You saw sweeping election results in Germany with the right wing winning more seats, which really upset Bloomberg, and the same in France. Turns out people are upset about war. Turns out people are upset about mass immigration. And turns out people are upset about the expense it costs to live in these countries. So you're seeing a lot of tumult, and you're going to see more of this, especially in this country as we approach election season. You're seeing somewhat of an uprising of people. People are fed up and people are pissed off. And what we're trying to do on this channel is find the best ways to profit from the euphoria in the market and then ultimately the despair in the market when we enter that recessionary stage. So without further ado, Lee, let's go ahead and start this show. All right, guys, we're going to go ahead and kick this show off. If you want to trade these markets, check out Bitunix. Guys, you can trade there with no VPN, no KYC. It is a crypto exchange for spot, for futures. And according to them, they're going to be building out a whole new addition to their trading platform where you will be able to soon trade the markets, trade commodities, and possibly trade Forex as well. Some of that may be coming out as soon as this summer. Very few exchanges left where you can trade anonymously. If anonymity is important to you, then check out Bitunix. It's in the video description. I'll pin it in the comments section as well. And of course, SimpleFX, where most of the world can trade on that fantastic exchange. You can trade by depositing crypto or by depositing fiat. KYC process, extremely simple. That's in the video description. If you want to check out our Discord, then go ahead and message Lee in the Telegram or follow those instructions in the video description as well. Let's start the show. So NVIDIA had a 10-to-1 stock split. That's why we're starting off on this, because this is the big heavyweight in the market, responsible for more than a third of the gains in the S&P. And now it went from over $1,000 to $122. So people keep asking me, where are the levels on this stock? And I keep telling you, just quite honestly, I don't know, because every time I pull fibs on this thing, it just takes off, right? It gaps up through the fibs over and over again. But right now you put in your high, which with the new math is 125.59. That's your high. This is where you're at right now. All the markets, including cryptos, are being staged right now. They're all being staged for the main event on Wednesday. Okay. That's going to move the markets. That's your summer trading direction, is this Wednesday. Cool inflation, markets are going to rally. Hot inflation, markets are going to sell off. It's quite simple. Okay. So we're going to use this video to go over these levels. But NVIDIA needs to get above 127 to go on to new highs. If it loses 116, then you can look at it to give up some of these gains, go down to possibly 106 as well. If we go ahead into the 10-year, 10-year had a massive move, 15 plus basis point move based on that non-farm payrolls BS job number, back to 4.465. So 4.47 right now in the 10-year. But, ultimately it never got above that 4.63. Okay. So we had the double top play out, broke the double top, found support. I'm telling you right now, if that inflation number comes in cooler, the yields are going to dump massively. The DXY is going to dump, and then markets are going to move up. And conversely, if the number comes in hotter, like a spot 3 on month over month or higher, you're going to see the reverse happen. Yields will rise. And I think these could potentially be big moves. I was listening to Wells Fargo chief global strategist, some BS title like that this morning on Bloomberg. And I agree with him. I think his name was, I want to say Michael Schumacher, but I might be thinking of a famous race car driver or something. But he said he expects a massive move. If this number is cool, you're going to see yields fall as many as 15 basis points or rise as many as 15 basis points if the number is hot. I tend to agree. This is an extremely volatile, catalyst-driven market, and we're going to see these moves play out. So right now, you're just hovering. Don't be surprised if this thing tanks or if this thing rocket ships up based on what happens Wednesday, okay? DXY, same thing. We broke our uptrend trend line, false break, broke back to the upside, giving some of the gains up this morning, 105.169. So again, this is going to be heavily driven by what happens with inflation on Wednesday. Looking at our divergences in the marketplace, divergences can play out many different ways. Many different things can give you divergences. In Dow theory, you have the Dow transports and you have the industrials, and they're supposed to support each other, confirm each other if you're in an uptrend. Transports have been going down when the Dow is making, the industrials are making new all-time highs. And now you also have the Dow acting as a little brother to the S&P, right? 30 stocks, but all the sectors are represented there. And the Dow's below its 50, as you heard me say in the monologue. And the S&P, you only have 48% of the companies above their 50-day moving average. So this needs to break out above the 50 and move to the upside if the uptrend is going to continue. If it starts rolling over with the inflation numbers, then you want to see if this is going to hold 37.8. If this doesn't hold 37.8, I think you're coming back down to the 200. right around 37.1. I think that's what's going to happen, and it's all going to be based on this number. But if it does hold and we get cooler inflation numbers, if the economy is truly slowing down, then you want to look at these levels above you, 39.1, specifically to 618 at 39.4. These will be some targets that you want to hit, breaking out to the upside potentially, 786 at 39,763. Ultimately, you need to take out that high of 40,000 to have a lot more upside, okay? It's going to be data driven, guys. Looking at the euro dollar, ECB cut rates. Everybody keeps telling you, if you watch Bloomberg or CNBC, rate cuts, the money managers come on, the cuts are really bullish. Well, the ECB cut rates, and every trading day since for the European markets, they've gone down. Okay. The DAX is back below the 50 this morning when I was looking at the charts, and that's since the ECB cut rates. And now they pivoted. The new direction is, well, that's because the elections are upsetting the market in Europe. The elections are upsetting. It's nothing to do with the rate cuts anymore. But anyways, euro dollar, guys, we fell to support at 1.07, 1.07,300. And again, this is the same range we've been in since January 2023. So we want to see a breakout above 1.106 or break down below this number, 1.073, because if you start coming down further to 1.04, this would mean the dollar is gaining strength. But if you start coming down further, then you have parity coming back into play. And this can be a good move on the euro. So we don't know the direction yet. Remember, this is a complex market because it's not just about the US inflation number. It's about what the DXY does in relationship to their euro. Okay. So if we look at our fractal pattern, this was tracking so gorgeous, past tense, 35 bars, 50 days between our tops, 38 bars, 52 days between our tops. We got this beautiful trade from this move, hundreds of S&P points. But I was looking for this next top to bottom, 13 bars, 19 days, 13 bars, 20 days, but that's June 12th. And as you can see, we're just floating. We got a half retracement. We didn't come down far enough here. If we look at this on a measurement tool, actually, let's get the points calculation here as well, because this was a really good trade on the market. This is 162 points, a 3% move, a very shallow retracement. So if we get the hot CPI, this is coming back down, and I think you'll be coming back down to test your line. We'll look at this on a clean chart, but as you can see, you're floating around in this top range. So without a doubt, this pivot point here on June 12th, which works out to the same exact bar count, 13 bars, is going to be huge. Now, I expected this pivot to come in as a bottom. Maybe it comes in as a top, or it could be the bottom here for the next leg up. So it'll be interesting to see how this plays out. But suffice it to say, the fractal pattern from top to bottom didn't play out on the second leg. We got a retracement. We got a nice trade off of it, but now we're back up to the upside. So let's see how this continues to unfold. We look at the ES on a clean chart, looking at this on a 3-day chart, guys, for the S&P. Couple of things I want to show you. First thing I want to show you is that fractal high here on the 28th of March, down to that retracement low that you made on the 19th of April. Right? I want to look at this level, because when we look at this level, you can see the 1272 is 54.34. Above you is 55.62. Now, if we take this same exact measurement and we go from the previous all-time high down to your market low, look how your 1618 start to give you some confluence here. 55.62, 56.15. So let's call it 5600. I think if we get a cooler inflation number, granted there'll be some pullbacks and retracements, but I think that's going to be your move, your potential breakout to the upside. And if you take out 5,400, 5,450, you're going up to that 5,600 level. Okay. That's what it looks like to me. And we can see how Fibonacci has played out here very nicely. If we look at this previous retracement high from the 26th of July, your July high down to your market low, 53.34. Gave us this great trade, right? This was another trade that we took in the room. We talked about on YouTube, and this was a very, very nice move down on this trade as well. What was the move here? This was a 7% move for 370 points, but you can see the 1618 played out absolutely beautiful for expansion, but you're above the 1618 now. So if you fall back below 53.34, this opens up the downside possibilities in the larger time frame here to come all the way back down and eventually retest your neckline of the massive double top that you made. But again, this is all going to come down to what happens. what happens with this report. Let's look at this on the daily, get some more fib levels, a little bit more zoomed in, because we had that retracement here that we traded. If we pull fibs here, coming up to the daily high here, May 23rd, pulling this down, you can see we're struggling right at that high of 53.68, right? So that's your struggle point. 1618 would take you up to 54.68. So again, guys, everything tells me if we get this cooler inflation number, look for a breakout. You have to defeat the 5400 range. If you do, then I have confluence vis-a-vis different Fibonacci pools here for a 5600 target. Okay, does it have to play out that way? No, lots of things could happen, obviously, but that's what we're looking at with a cool inflation number. Watch for your breakout above that key resistance of 53.68, and then watch your 5400 level, because if you take out 5400 and you continue to move up, moving up towards 5600, and that could be your melt up, which could happen here in the summer. Now, the last 3 years in a row, we've topped out in the summer and then retraced. So maybe that could be a top that forms in July. We don't know yet. Again, catalyst driven, because if that number comes in hot, then this is just turning right back around and giving up a lot of these gains. So let's zoom in a little bit and look at what that would look like with a hot CPI number. The level you really need to hold is at 5200, which is your base here, right? It's your base. You have several patterns that have formed, but you have this double top pattern. If this starts to sell off because of a hot CPI, then this was nothing more than a false break high, right? Meaning that it attempted to break out above the previous high. False break comes back to the downside. If you take out 5200, I think you're coming back down to these lower levels that we talked about prior, 51, 54, the top of your W structure. Why? Because that's what the Dow did already. The Dow already did this, okay? It wasn't a secret. And again, all the same sectors are represented in the Dow. So this is going to be really pivotal with what happens. And of course, you have your larger three-wave double top pattern here as well. So if this was super bearish, let's say inflation comes in hotter than hot, right? There's a hotter than hot bullshit thing, but it comes in super bearish, hotter than hot, then the key level you want to hold lower down is 49.63, because if you give that up, then you open up your December highs back at those lower level targets that we've discussed, your 4,800 level, 4820 or 4700 level, this December high levels. Okay. So it's stages. Do we know what the number is? We have no idea. I'm guessing, you're guessing. And from all intents and purposes, with given how wrong the Fed is all the time, they're guessing, but they're expecting a cool number. But view the market as levels. You have to take out 53.85 to get more upside. Take out 54.50, then you're going to 5600 based on Fibonacci. Okay, if you can continue with the upward euphoria, the upward momentum, and that will give you this type of W pattern here, like this. Okay, this would be the W. Here's your pullback, that retracement, and this would be coming up to that 5600 level. If it plays out that way, it's a catalyst driven market. We'll see how this plays out. Let's go ahead and look at the indicators here on the daily. MFI is going back to the median line. Momentum's flattened out as well. I anticipate we're going to be hovering in a range, guys, until we have those Wednesday. The CPI numbers followed up with the cuckold pal just after that, giving a little speech. If we look at the NQ, something interesting here. If we look at this from an ABC perspective, we go ahead and draw this for you. Use our trend-based fib extension, go to your market low from October 12th, 2022, up to that corrective high in July of 23, right back down to this level here, the corrective low. You can see 19,718. Why is that number interesting? So that's a symmetrical move. So if you look at this from an ABC perspective, market symmetry is really big with geometric traders. You hear me talk about it all the time. If you look at this from an ABC, it would be this type of move, okay? An ABC to 19,718. Right now, you're at 19,1. So if we look for Fibonacci confluence, this is the NQ chart representative of NASDAQ, guys. We look at Fibonacci confluence. We can go to our previous all-time high in November 21. Pull that down to the market low. Do we have anything lining up around there? We have the 1618 up here at 20,650. So a little bit higher. So this number was right smack in the middle. We can take this off. We can look at this from a closer perspective of that previous March 20th, 2024 high down to that corrective low. and look at your 1618. It's literally right on top of it, 19.7. So again, this move, you're butting your head right up at, as far as how accurately is that tracking though, you're butting your head, the 1272 is 19,143. You're at 19,108, 19,155 was your high. So this looks pretty accurate. This is a narrower target range versus a broader target range. But from a narrow target range perspective, that 19.7 is going to be an expansion move and also completes an ABC, which is 600 points higher. Cool inflation, watch that target. Because why? Because the NASDAQ can move about, let me throw my ATR on here. It's averaging about 300 points a day. Yeah, 250 points a day is what the average move is. And that's 600 points. So you're talking about 2.5 days move to get up to that level. See what happens when we get to that level. But beyond that, the 200% move would take you to 20,304. Okay. So 20,000 would be your next target. And that would line up back with this larger expansion target from that previous all-time high. Pull this back down, a little bit of a Fibonacci lesson today. Pull this down from the previous all-time high down to your market low for this cycle. And that takes you up 20,650, 20,304. So again, that next level target, 19.7 with a cool inflation number, perhaps ultimately getting to that 20,000 level, which I believe, as we've discussed before, is 100% move. Is that not? Let's go ahead and measure that because I don't have that chart up. So we take price range tool from the bottom, from the cycle low, come up to that 20,000. Yep. There you go. That's right about 100%. The natural doubling and halving in the market that Dow and Gann talked about quite often would take you right up there to that 21,000 level for an even 100%. Okay, so we're going to watch these moves, but just like before with the S&P, hot inflation, this is turning back around. So let's go ahead and look at this from that perspective. Now that we looked at the upside, keep you guys in the know here. Get rid of this ABC. But let's look at this on the daily. So we have the daily, and if we look at this, we're going to look at our key levels that you need to hold as support if this thing starts tumbling. So first fractal low we're looking at is 18,241. Why? Because you have this double top. This would become a false break, just like in the ES. You would be coming back down to test this neckline at 18,241. If you're able to take that neckline out, the next neckline, just like on the ES, imagine that, is a larger double top pattern, just like this, right? This whole area would become a false break. I often call these Bitcoin double tops when the second top's higher than the first top. But if you take this level out, this is already putting you back at those highs, right? So maybe you would just revisit this for support. This is already putting you back at the December highs, just like the Dow did, just like the NASDAQ previously did. The S&P has not done. So that's 17,113 down here at that level. So we'll see what happens. Let's throw this 50 on here, see where that 50's at. The 50's right here. So that's the key retest, 18,241. Hot inflation. Watch to revisit that. And that's 900 points lower. So that could be a great trade. If it breaks that way, you're at 19,112 right now as I'm recording this. If we look at this on the daily time frame, what are the indicators doing? Indicators on MFI, we're looking at the MFI being flat. Again, momentum starting to flatten out as well. Everything's going to be in a holding pattern, waiting to see what Wednesday brings, guys. We look at the Russell, you're below the 50. You're below the 50, but we've talked about this. This can be this W pattern for an upside breakout with cool inflation. If we take a fib here from the low to the high of that midpoint, you came down below the 50% retracement, you bounce back above the 50% retracement. So you want to watch that spring move. If you get that spring move, your key level above you is a 618 at 2152 from your all-time high. Because you hit it and you failed, you've only hit that level one time since you made the all-time high. So in the last 2 years, you've only got up there once. So that's your first key level, 2152. You're at 2030 right now. Let's get to Bitcoin. Looking at Bitcoin, we have the massive three-wave double top on a 3-day time frame. You've been retesting your all-time high area. But more importantly, if we look at this on the daily time frame, based off this fractal pattern that I've been showing you guys, 71,850 once again held. It once again held. You sold back off, and now you're at 69,986, right? That's where you are right now. So we want to look at this a couple perspectives. Remember, this is my neutral territory for Bitcoin between 71,850, 64,450. These are big moves, but I'm talking about the macro pattern here. This is the bullish territory. This is the bearish territory, right? So when we look at this, a couple of ways we can look at our fibs here. If we were to break out with cooler inflation numbers, we want to expand this range. We want to expand this range. You often hear about people talking about measured moves. They're talking about a specific range. And again, the natural doubling in the market that Charles Dow wrote about and Gann wrote about. But with Fibonacci, it's not about the doubling. It's about the 1618, right? That's the golden ratio for expansion. So when we look at this, if you take out the 71,850, if you take out this fractal high with cool inflation at 73,850, then your next level is 78,556. You could see some type of move like this. So you have your W that formed here, right? We talked about this being a possible pullback type pattern. Your W that forms, and then maybe you get a soft pullback, and then you expand back out to what? Ultimate target here would be 84,550 if the markets break out and Bitcoin wants to break out. The two key levels, you got to take out the high of the range, 73,850. Then you have 78,5, 84.5. Those would be your two key upside targets. Conversely, the lower levels have not changed. If you start breaking down your 50s down here around 65K, if you start breaking into this territory, the key level, the ultimate key level to watch is your neckline, right? Because if you don't watch your neckline here of that massive three-wave double top at 56.5, I'm expecting at least a test down to 52. And if it continued to retrace, bring you down here to that 46, 47 level. Again, so everything's about the catalyst, guys. If I knew what the Fed was going to say the inflation was, or if I knew what the CPI report said, if you told me, Brendan, it's coming in at spot 2, markets are rallying, I'm looking at upside. If you told me it's coming at spot 3 or greater month over month, then I know things are going to be selling off. So I'm looking for tops to trade. But the bottom line is I don't know the number. And you're going to get a violent move. And worse yet, it could be a blended number like we've had before. One thing month over month could be hotter or colder, whereas headline could be hotter or colder, right? So you could get a big whipsaw. So I'm taking this a day at a time and watching these levels, preparing my trade setup, my mentality for what could happen either direction, right? That's the only way I know how to do it because I don't know what the numbers are going to be. Doesn't matter. I have this three-wave double top. This can be reversed into a W for upside, or it can start to break down and test these downside levels. If we look at the indicators here, momentum is flat on Bitcoin. No surprise. You look at some basic level TA, you get this anywhere. There's your low. Here's your higher low. You're above the 50. So you have a bullish uptrend going, but overall, you are in a bearish macro pattern until you take out these fractal highs. That's where that market stands. We look at Solana, same situation. Talked about this many times. If this is just the pullback, then you form this W pattern that will take you up to these levels. You need to watch 210 and 236 would be your next level, where ultimately, if you see 85K Bitcoin that we just talked about, you're probably looking at a 270 number on Solana from a 161. So what do you think I want to do if inflation comes in cooler? I want to be looking at some of these longs in the crypto space if they follow suit, right? A lot of ifs, but that's what trading is. If they follow suit and the markets have a sustained rally. So we'll be updating you on that. And of course, we talk about all this on the Discord as well, guys. But your key levels, again, until these levels are broken, is 189, the 786, and of course 210, right? Because this gave us a great trade, a 45% drop. So you want to make that W, you got to see cooler inflation, you got to see markets rally, you got to see Bitcoin pull up, because if you don't make that W, you have your M, okay? And if you get hot inflation, if Bitcoin sells off, markets sell off, then you need to watch these levels. 113 is your key level for the neckline, because if you lose that, you're going down to 92 and or 66 if the sell-off is prolonged, okay? Let's look at the indicators on Solana. MFI is flat, momentum's flat. You guys seeing a trend here? Everything's waiting for Wednesday. Ethereum, just below the 1618 at 3,700, 3,701. It's at 3,698. We kept struggling here up at 3,911. But again, this is a sideways corrective pattern for right now. This can break up. this can break down. The key levels beneath you, if you start losing these 3,500 levels, then this thing's going to break down. But again, all these are tied together, right? If you have on your phone and you look at your phone, if you see Bitcoin dumping, you know the altcoins are going to be dumping overall by and large, right? If you see the markets rallying and Bitcoin's just sitting there, if the markets have a sustained rally, you know Bitcoin's probably going to rally and the altcoins are probably going to rally. So understand how all these things tie together. And if the markets are rallying, you're seeing the 10-year dump and you're seeing the DXY dump. So when you understand the hierarchy, the structure of the marketplace, it'll just help you understanding the whole flow, whether you're trading Pirate Chain, whether you're trading Ethereum, whether you're trading Bitcoin or the S&P, right? They all just tied together. So these are the levels I'd watch on Ethereum. Momentum, again, everything flat. Okay. So everything's just copying each other. We look at the DAX. The DAX had another sell off, another little bit of a rebound. It's still struggling. You have multiple patterns here. I was trying to see if we get to move up to the 18,922, but you have this pattern. You had your first W pattern play out on the DAX. You got your upside. Okay. Market start to sell off. They cut rates, market rallied up and then sold back off again. So what you're looking at now is this structure, right? Is this going to be another W pattern for the upside, or is this ultimately going to resolve as a giant M pattern to some level of resistance and start breaking back down? And that could be the high right there. We don't know. Let's see what those numbers are on Wednesday. But those key levels that I would want to watch remain the same, guys. Your resistance right now is at 18,641, getting above that, staying above it. Your key resistance, 18,922, where you failed just above that on this current sell-off, because this can all resolve into a much larger W pattern if the U.S. markets do start really getting a substantial rally, where you could see the DAX start rallying in kind as well, right? The markets will move together. The algos, the big dumb money will buy and sell these markets. So you'll see a lot of these movements. Looking at the FTSE, same thing. We hit our target up here, 8,850. We fell down. We rallied back up to the spot 66, which is a Dow retracement, 66%. We hit that on the dollar, 83.74, and then you sold back off. So you did this move. You made a little double top. You sold back off, try to come and retest your neckline, but this can all reverse into a W for more upside, depending what the U.S. markets do. The level you don't want to lose here without having more downside, 81.51. You lose this, 81.51, you're going to be coming back down to retest 8,000. Okay. Lose 81.51, retesting 8,000. If the markets rally based on the Fed, then you're going to see this start moving back up. Those resistance levels would be 83.20. 83.60 would be the two levels immediately above you. Looking at gold, gold's just been volatile, still in the same range, 24.50. 2277, right? So you're still in this same range. We'll see how this ends up resolving. Ultimately, I believe it's going to resolve with the markets. S&P moves up, gold's going to move up. S&P sells off, gold's going to sell off. Why? Because it's been tracking to it beautifully. So you're just in a no trade zone for me, floating in the middle. Looking at silver, even more volatile in gold. We had some nice moves. We had the double top we talked about. We got to the 2 fib at $32.26, sold off, rallied back up, sold off again. And this just gave you three waves. Wave one, wave two, wave three. Could it be three waves to a bottom? We'll see if this bottom holds. These are by and large symmetrical moves, about 8% moves down when you average them out, I believe, here on silver. So if we take that first wave, come down to 7.61, market symmetry here, 9% move. And then the second one is somewhere like 7.6, 7.7, I bet. 7.7, So right about 8% move. So you have a lot of market symmetry in these declines. We'll see if this holds up as well based on what happens with the Fed and with the inflation reports. Guys, hope you enjoyed this video. Hope everybody is having a fantastic start to their week. Consider checking out our Discord. Be sure to like and subscribe. And we post all these videos on X. You can give us a follow there as well. All right, guys, take care, everybody. I answer your comments as always.